I'm Christy Duffy for Smart Trend News. Now to discuss the earnings preview for JPM Chase, due out in 2 weeks' time. With me today is Richard Bove of Rochdale Securities. Richard, my first question is, JPM beat its first quarter estimates in April with an EPS of 74 cents versus a reported 40 cents for the first quarter a year ago. Net revenue in the first quarter was $28.1 billion, and the street was looking for $26.5 billion. What are your estimates for the second quarter 2010 EPS and revenue?
Well, my estimate, unfortunately, is substantially below that of the street for JP Morgan. The earnings per share number is 65 cents a share, and the reason why it's so low is because I think that there have been a number of negative developments within the trading, investment banking portions of the company. I also think that there has been considerable problems continuing in the real estate area, so that their loan losses from residential real estate could be a problem in the quarter also. The net of it is I just don't think anything really worked, for JP Morgan in this quarter, and therefore, as I say, my estimate is substantially below that of Wall Street.
What's interesting is that in the first quarter, Jamie Dimon came out and made a statement on the day of their earnings release saying that their strong earnings last quarter were largely due to the investment bank portion of the company. So did you agree with that during that quarter? And
I think, unfortunately, what happened during the quarter is there's been a steady erosion as a result of, we'll say, a number of extraneous shocks. We didn't expect the European problem to develop as it did. Once the European problem developed, it was not expected that the junk bond markets would close down as much as they did. And I think that, the fear of so much anti-business, if you will, coming out of the government, leading to, issues related to what a tax is going to be, what a health care is going to be, is the economy going to go into a double-dip recession in the second half. All of those things caused investors to pull funds away from the market. So the net effect is, as a result of all of that investor fear in the fact that they backed away from the market, the junk bond market closing down, issues related to uncertainty, we're now in a situation where trading is well below what one would have expected. We didn't get the equity offerings we expected. We didn't get the merger and acquisition activity, which is implicit in the backlogs in these companies. And, we continue to see problems, as I mentioned, in residential real estate. So all of these factors which developed during the quarter have resulted in reducing estimates, not just for JP Morgan, but for just about every major financial company in the country.
Do you think that the banking reform that just passed the Senate last week, it caused all the banking stocks to soar immediately after the passage? JP Morgan did drop then in aftermarket hours, but do you think that will provide investors with any of the confidence they need to jump back into the market?
No, exactly. Well, I think it'll be exactly the opposite. My take on this bill is that, number one, it's created a bureaucratic mess in the bank regulatory area, one which is so convoluted that it'll be almost impossible to follow what these laws are going to be. Two, it will drive up the cost of consumer finance dramatically in the United States to such an extent that I think at least 10 million people will lose their bank accounts. Number three, it will lower the liquidity in the financial markets. And number four, it will reduce the competitive nature, the competitiveness of American banks vis-a-vis foreign banks. I see virtually nothing positive in this bill, for people outside the banking industry. Forget what goes on inside the banking industry. Perhaps the worst thing that is coming out of this bill and the regulations that are tied to it, the increase in capital requirements, the credit card bill, is that M3 is now declining. It's very hard to assume that the U.S. economy is going to rise in the second half and miss a double dip if they can't stop money supply from dropping. But no, I don't see anything in this bill that would give people a good feeling about JP Morgan or any another bank.
All right. Well, as Chris Dodd said shortly after the passage, no one will know until this is actually in place how it works with the system. So I guess we'll have to wait and see what effects it has. Thank you so much for being with us. Dick Bove again from Rochdale Securities. It was a pleasure to speak with you today.